Well, good morning. Welcome everyone to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for this morning's session. And for those of you new to the trading room, welcome. I'm going to give you a really quick overview of what you're looking at here. This is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. Across the top, I have my Hawk Scalper. Through the middle, I have the Falcon Swing Trader. And across the bottom, we've got the Eagle Trend Trader. The markets we're following here on this particular monitor is the NASDAQ. I've also got the E-mini S&P and crude oil loaded on my other monitor. But I'd be more than happy to take a look at any market which is of interest to you. So please don't be shy. Regardless of the tool that we're using, the signals all develop the same way. What happens is, well, actually this one's a little bit choppy right now. Let's go here where it's a little bit plainer. We're going to get a warning dot along with an audio alert. Then when all the signal parameters are met, we get a triangle and a hash mark. That tells us it's time to make a decision. Now, not all signals are created equal. We tend to look for those signals where there is confluence. In other words, everything is going to be the same. So here on the Falcon, we pay a lot of attention to this trend line. When the trend line's green, we're looking for buy signals. A buy signal is green, the bars are green, the trend line is green, and the filter is green. So that would be a buy signal. And you can see we had enough follow through there to hit our swing target. That occurring sometime last night through the Asian session. And then it looked like the market turned around. And now we're just kind of stuck going sideways. So we're working a possible trend change again now on the Falcon. Now, I should warn you, today could be a little bit of a sideways kind of day, given that yesterday was such a good rally day. The market just made a huge move to the downside, got much further than I anticipated. I thought we were going to hold up at 48.50, and the market tailed off all the way to 4,800. Bernard's asking, what's your favorite futures market? Well, Bernie, I'm partial to the NASDAQ. I think the NASDAQ offers day traders a lot of bonuses. There's the $5 tick value, which means that I can usually end up trading 2 contracts for every contract I could take, say, in the E-mini or the Russell. And there's a reasonable amount of volatility in it as well. So we can see some good gains. And darn it, I missed the first micro-macro cross signal. I was holding out for this one, and then I looked away and the signal printed. So this is what we call a first micro-macro cross signal here on the Hawk. This is our scalping tool again. This is actually a very high probability signal. And whenever your trend lines cross over, you should be on the alert for a first micro-macro cross signal. This one having a little bit more follow-through than the other scalp signals, but the first micro-macro cross occurs when the micro line, that's the thin one, crosses the macro line, that's the thick one, and it's the first signal, again, where everything is in sync. So we've got red bars, red signal, red trend lines, and of course a red filter. So when we get that signal, we could set up to take our signal. The tool I'm using here on the right is the Trade Manager. I'll talk about that a little bit. And you can see that would have been a very nice little start to the day. But that's all right. It's still early. We're only a few minutes into the session. I'm sure we'll get another signal. Now when I'm waiting on with the hawk, oh, here actually on the falcon we're getting a sell signal. Now this is a little bit problematic because of the range. Can I cover it up there? No. Now note the trade manager would not allow me to take the trade from down here and cover it up here. Oh, actually it's letting me do it now. All right, what we'll do is we'll throw that order in. So we've got a trend change signal. I know it looks like it's coming very late, isn't it? But the problem I'm having with this trade is where do I cover the trade? There's very little structure through here. So I'm going to keep my stop a little bit further back. Now, for most of you, this is going to look very lopsided. And you're saying, what is he doing? Is he out of his mind? Well, depends who you're talking to, I guess. What the trade manager does, however, is it caps my risk. See, right now I've got my risk set at 2% of my trading capital. That means that no matter where I place my stop loss, my risk amount remains the same. Let me demonstrate here on the hawk. So let's go back. Oh, we're actually working a 4-arrow consolidation. Let's go back to the signal right here. So most of you are probably in the habit of placing your stops right there. Note the risk amount, $400. But by placing your stops so tight, there's always a chance that the market might make a little hiccup, right? Like that's what happened here. The market printed a first micro-macro cross, came down for a little bit, made a little hiccup, would have stopped you out, made a rather substantial pullback, but then continued lower. This is, of course, so pre-market's a whole different animal. Oh, and excuse me for a second here. I heard the order fill. I want to open up the profit target. So I'm going to eliminate the profit target and my break-even trigger because I want to show you how the trade manager can roll your stops for you automatically. But let's get back here to the point I was trying to make. Okay, so if I put my stops tight, I've got $400 at risk. If I place my stops a little bit further away, oh, look, I've still got about $400 at risk. If I place my stops really, really, really far away, oh, all right, we got a little bit of a rounding thing going on here. Okay, we'll put them up here. I've still got about $400 at risk. So the trade manager always keeps my risk the same. But the big question is, which trade has the highest probability of reaching its profit target? Well, intuitively, it should be the one with the biggest risk, right? Or the biggest stop. Not dollar-wise, but distance-wise. This trade has a much higher probability of reaching its profit objective than this trade. Right? Don't believe me? Let's dial it back to this one right here. Same signal, first micro-macro cross signal. If Oh dear, my audio cut out. Thanks, Don, for letting me know. So I'm at a, don't really know how much of that you heard. I'll be repeating it as the morning goes on. The whole point of the exercise, however, was that you don't want to keep your trades ultra tight because your risk amount never changes. Right? What you want to do is you want to concentrate on capping your risk. So regardless of whether you place your stop here or whether you place your stop here, you've got the same amount of money at risk. You're only risking a certain percentage of your capital. It's very, very important. All right, so we had a 4-arrow consolidation and a macro pullback signal here, the NASDAQ. So this was also a sell signal for us. So we had that first micro-macro cross. The next high probability signal came right here with the macro pullback. Again, I got the same kind of problem. I don't really have somewhere to cover it, but it doesn't matter. It fell off quite nicely. Okay, let's go back to our struggling Falcon trade, where the market's kind of bouncing around a little, kind of hemming and hawing. All right. While we're here on the Falcon, before I leave the Falcon, you probably noticed these horizontal lines. This is the ultimate support and resistance suite. This is what we call a system add-on. And what that means is it's a standalone trading system. You can use it on any chart. It forecasts the support and resistance levels for today, and no, they are not floor pivots. And no, they are not Fibonacci retracements. They're actually much better. And I'm saying that all modesty aside. So we've got an assortment of levels here. The gold line is the median line. That tells us that we've got 10 support lines below, 10 resistance lines above. The blue lines are primary resistance and primary support. Once the market gets through here, it does have a tendency to drift two zones. So in this case, now that we're below the primary support, there's a pretty good chance that we could see the NASDAQ fall off to the 47.74 half, 47.75 area. We'll see how that goes. In fact, what I'll do is I'll throw in an order there. That'll be my profit order. Well, we're working a little bit of a trend change here. They're trying to get a little bit bullish off yesterday's lows. Sellers got in early this morning and tried to capitalize on that big move lower. Oh, in fact, darn it, I missed it. What we've been playing with here on the Eagle, this is the Eagle Trend Trader, and the Eagle Trend Trader has got this band running through it. No, it's not an Ichimoku cloud, but it does give us our directionality, and it does show us where the market's likely to react. So whenever the market encounters what we call the hard edge up here, we expect a reaction, and usually a continuation, usually the market to move along with trend. And what we've been playing with the last week or so are signals out of the open. Russell, one of the room members, brought this to my attention. And when you have a signal that is in sync, the first signal of the day on the Eagle seems to have some pretty good follow through. Yesterday, of course, was exceptional. But even this morning, this was the opening signal. This is what we call a green bar sell. It's a high probability signal for the Eagle. It happens when the market hits the hard edge. And I wonder if we had found our profit target yet. Oh yeah. So out of that early decline, and now we're coming back into the hard edge. I do think the sellers owe us one more move lower. Come on, you guys. So we're going to come into the hard edge here and try to press a little lower. Now, what I'm waiting for is I'm trying to demonstrate the stop strategies here on your trade manager. The trade manager has two components. You've seen me demonstrate the risk component. I haven't mentioned this part down here, but you can split up different profit targets. Currently, I'm all in, all out, but you can set as many as 3 targets and a runner. You can preset profit objectives here, or you can just click on the chart wherever you want your profit target to be. Up here, you have what we call the profit manager portion, and there's 16 different stop strategies to choose from here. They're all customizable. And what those look like is these blue dots. So I'm just waiting for the market to give us a little traction. So you see I can change the parameters of those if I want them to be a little bit tighter or looser. This is the ATR stop, which is the one I have set by default. And the trade manager will automatically pick up the stops and roll the stops along with the trade. If we can get a little momentum. Like I said, I kind of suspected today would be a sideways sort of day. It used to be when the stock market had a rally day, either higher or lower, you could expect a couple of days to go in that direction. But not anymore. All right, well, we're getting a trend change signal now to the upside. Just the warning dots. The buyers looking like they're going to make a push. Possibly off of the lows down here, right at 4,800. Honestly, I was a little hesitant to take that, but hey, it's a demo room, so I gotta demo something here. I still think they owe us one more move lower. Once we see the sellers come back into the market, I can start to take my stop and I'll start to roll it down. Crude oil also with a little bit of a big move out of the gate. Let's take a look at crude oil. Here's crude oil on the Eagle. And right out of the open, we had that green bar sell signal. And boom, down they go. That was a big move for crude. Oh yeah, easily hit the profit target. could have even trailed the stop for further. The reason we go with high probability profit targets is very often the market will react after hitting our high probability target. All right, so here come the sellers. You can see we're into the hard edge, so we're going to anticipate a reaction now. Come on. Give me a couple bars lower here. Oh my gosh, they're dragging their heels. I didn't check the reports calendar. Is there something? Are we waiting on something today? Just checking. Oh, a jobs report at the top of the hour. That could. Oh, and it's an FOMC day today, too. Cool. Yeah, so the market's very likely going to be a little bit range bound and sideways. That's all right. We'll probably get a couple scalps out of this. But, well, we already got a couple scalps early, but we'll stay with this. People always asking, how do you trade a sideways market? How do you trade a choppy market? Well, the hawk is probably the best tool to let you know when a market is going sideways. How do you know that? Well, you're going to start printing a lot of yellow bars, and they're going to be more or less the same latitude, more or less the same price level. Your filter is going to start breaking up quite a bit, and just everything is going in sync, out of sync, in sync, out of sync. You're just all over the map. So then how do you trade a sideways market? Well, quite honestly, the best way to trade a sideways market, well, there's really only two ways to trade a sideways market. Let's put it this way. So let's start with option one. Option one is to sell the top end of the sideways market, buy the bottom end. Of course, that leaves you open to the time that the market finally breaks out of the sideways range, and that trade's going to be a little bit of a stinker, but it does give you some reasonable opportunities, especially if the range is fairly well established like this one is. So the market gets to the top end, you can start to sell, and it goes down to the bottom end, and you can see traders tried to buy it up as it got toward the bottom end of this trading range. My preference for trading a sideways market, however, is to allow the market to break out and then retest and show that it can stay out, and then look for that signal to print. This is a higher probability trade. Same thing to the downside. Let the market break out, prove that it can stay outside of the range, and then look for that signal to sell. So let's see what happened here. The market broke out. You got a little bit of a retest here. And now the market's trying to head lower. No, they're still retesting. Not quite outside that range yet. Yeah, actually things not looking so good for the sellers right now. The market's starting to look a lot more bullish. All right, so here they come. They're closing in on my stops. What is you know, it's always aggravating as a trader to take a stop out, not so much because you were wrong about the trade, but rather because you probably ended up losing more than you could afford. The beauty of using the trade manager and capping my risk is, okay, if I get stopped out, all right, I was wrong about the trade, but I did not lose an amount greater than what I could afford to lose. You know, I've got people coming to me for coaching and mentoring, and if there's one common denominator among all of them, it's that they end up losing more than they can afford. They end up risking more money than they can afford. So then when you do take that losing trade, the market ends up clobbering you, and before you know it, you've got no money left to trade with. We all take a stinker from time to time. It's just a part of trading. The market will throw you a curveball, you'll swing at it, and then it will reverse on you and stop you out. It happens. But when it happens, don't lose more than you can afford. I cannot overemphasize that. All right, we'll put that on the shelf for the moment. All right, maybe I should be spending a little bit more time here with the Hawk scalper because we had another first micro macro cross signal right here. So on the Hawk already, we've had three decent signals. We've had the first micro macro cross lower. Oops, wrong tool. The first micro macro cross lower, the macro pullback signal, and the first micro macro cross higher. All three high probability signals, all three hitting their profit objectives. So in spite of the market being kind of slow and sideways today, there are still some opportunities to be had. Yes, and Russell says a couple four arrow consolidations as well. Yes, you're absolutely correct. So we got some signals overlapping. That's a four arrow consolidation along with that macro pullback. And then right here we come back with a four arrow consolidation along with the first micro macro cross. Now the four arrow consolidation, just like all our signals, we don't want to see too many within a trend. I know some of you are looking at this one and saying, oh goody, another four arrow consolidation. But we don't want to see the signals repeat, especially this close. That's not always a sign of strength. In fact, you've probably heard me mention before that regarding the macro pullback signal, when we start to get more than two within a trend, we usually see the trend start to unwind. Let me go back here to yesterday's session because today was a little bit choppy. that was in the overnight. Yeah, just lots and lots of trades yesterday. Okay, so all right, well, we'll take this leg of the downtrend. So we've got a macro pullback signal, a macro pullback signal. These are essentially the same. Those don't bother me so much. But we've got a macro pullback signal, then we've got another macro pullback, and did we get another macro pullback? So now we're 3 macro pullbacks into the trend. Normally we only see 2 within a trend. This one had a little bit of a reset here, came back and gave us another macro pullback. But at this point you should start to get a little leery of the signal. It's not that you necessarily walk away from the signal, but you're going to take steps to protect yourself, right? You're going to dial down your risk amount, or you're going to wait for a second push on the entry, something to, show you there's a little bit more momentum there, because what happened after here, the market started chopping around and started retreating against your position. So same thing is true with any of the signals, whether it be a macro pullback or 4-arrow consolidation. See, we've got a 4-arrow consolidation working again. So we've had this one right here, 1, 2, 3, working on signal number 4. Is it a viable signal? Yes. But it's the second 4-arrow consolidation within a matter of minutes. It's not what we would like to see. Can I take this trade, or should I take this trade? Well, it's a high probability signal, but it's maybe not the best signal. And what I mean by that is, I mentioned this the other day as well, where trading is all about probabilities. And so many traders have a production line mentality, where they think, I need to trade more if I'm going to make more money. And I don't think that's the right way to look at trading. I don't think you need to trade more, because the more you trade, the more likely you are to open yourself up to a losing trade. Rather, you should be looking at finding the high probability setups. Okay, well, what do those look like? Well, here out of the open, we're getting a first micro-macro cross. We know there's usually momentum out of the open, right? The first signal of the day. And it's a high probability signal. So there is a good opportunity. It's a high probability signal with a good context. Yeah, that's probably a better word. The context for this is good. So you can go in on this trade and you can say, all right, well, let's risk our 2%. I'll take it here. I'll cover it above the macro line. Oh, good. I can take 3 contracts. A few minutes later, boom, 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 I'm up 150 bucks. Okay. Thank you very much. A little bit later, we've got a 4-arrow consolidation / macro pullback. And you're looking and you're saying, okay, well, the low of yesterday was 4,800. I know that's going to be a little bit of a sticky point, but I can still get in and out with profit before I get down there. Maybe risk the trade up to here. Oh, good, I can take another 2 contracts. Boom, 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 down you go. You're up another $100. So what you're looking at is you're focusing on the probability of the signal as well as the context of the market. Okay, so here we are now. We've got a 4-arrow consolidation. Okay, great. We've got another 4-arrow consolidation right here. 1, 2, 3. This is going to be signal number 4. Is it a high probability signal? Yes. But it's not ideal. The context of it is kind of wishy-washy, or I think it's still wishy-washy. So should we take the trade? Yes, but you're going to need to take steps to protect yourself. So that may mean let's dial down the risk amount. Let's throw a little less money on the table. So can I risk it all the way below the low? No. Trade manager says, no, sorry, Eric, for your account size, you can't do that. All right, well, what about I go below the swing lows here? All right, I can do that. So I've got a little less money in play if this trade does not work out, but it's still a high probability signal. So the market goes up and fortunately hits the profit target. So, it was a non-issue. But you didn't know that when the trade was setting up. If that makes any sense. Yeah, we're getting all kinds of reversal looks here. We're working a rule of three signal here on the eagle. We've got one signal, two signals, counter trend. We do need to see a retest of the low, however. So we do need to see the market, the sellers try to push the market down one more time to make it an official rule of three. And it looks like they're going to do that now. Yeah, and like Russell said, he just posted, we've got one 4-arrow consolidation down and another one up. Normally, what I like to do is, if I get a winning trade in one direction, so we sold the market, it was a profitable trade, I will tend to favor the short side that day. Today, however, we're getting kind of a mixed bag, right? We had signals pay off to the short side. We're having signals pay off to the long side. So it's really all over the map this morning, which again is kind of indicative of a sideways kind of market. It's just that we haven't seen the trading range established just yet. All right, so here's the eagle now. Now, you heard me mention the rule of three signal. The rule of three is actually our counter trend signal. And before you can have a counter trend signal, you need to have a trend. So it appears as though the market's in a little bit of a downtrend. We've retreated into the hard edge, and now we're producing these buy signals. Normally, after the third buy signal, the market's going to try to make a break for it higher. But what we need before we can have that reversal is we need what I call a test of the extreme. The extreme being the low down here at 4,800. We need to see the market try to test that and then fail, and then if it fails and comes back with yet another buy signal, that will complete our third counter trend signal and give us a cue to buy that the market may well try to head higher from there. All right, still nursing the Falcon trade here, and I really haven't had an opportunity to show you the trade manager with the stop, auto rolling stop feature. Not yet anyways. We'll see if we get a little traction here to the downside. I'm going to enable the stops, and you'll be able to see how it rolls them down automatically, which is a great feature because what it does is it frees you up to look for other trading opportunities. Boy, we got a little bit of a struggle going on now. guess we just gotta wait them out. There's a teeny tiny gap above this morning's open, which might be calling traders. All right, so we actually produced another sell signal here, our trend change signal on the Falcon. It's unfortunate this signal started to retreat against us shortly after it filled, because we did get a buy signal here that would have made its profit objective, and now we would have had another opportunity to short and try to get back down to the bottom end of this trading range. But oh well, it happens. This could well be our trading range too, say from the low of 4,800 to a 4,820 zone. So we're settled here now on the primary support line. Come on, once we get below there, we should have a little bit more follow through. All right, we'll put that back on the shelf. No doubt the FOMC minutes are going to be a bit of a stick in the mud. I didn't see that crude inventory was on the books. Oh, oil is Thursday this week, Ken says. And so it is. Yes, crude inventory Thursday at 11 a.m. Eastern. So we can't even do the OCO order in crude oil. Normally what we do about this time, I start looking for an opportunity to bracket crude oil in anticipation of the inventory report. Actually, what I can do is, why don't I show you the OCO function on the E-mini? Because we have a pretty well established range. Here's the E-mini on the Eagle. Trade Manager has this cool OCO function, OCO of course standing for one cancels other. And when you have a market that is obviously sideways, as the E-mini seems to be, you can set it up to buy above the high and sell below the low. Now these quantities are going to default to whatever value you have set up here, right here in your quantity window. And these orders are live the moment you put them on your chart. So you're going to want to, or I normally place them away and then pull them into where I want them to be. And so you can bracket the market this way. You can also enable a stop, so you can have a stop strategy ready and waiting. Let's see. Yeah, that looks pretty good. So we'll activate that. And now what will happen is, let's say the E-mini rallies through here, breaks the high. Actually, I'll bring it in a little bit closer so we get an earlier fill. Breaks the high, we're going to get filled on the OCO order. The other order will cancel, and we're automatically going to get a stop. If the market allows me to demonstrate this. Actually, here we're demoing. Let me bring this in a little bit tighter. And maybe we'll go with a parabolic stop, something a little bit closer. If I leave it down here, we're going to have to wait all day to get a fill. And if it still doesn't cooperate, I'll bracket the last bar so you can see how this works. All right, here they come. Now you can set as many OCO orders on your chart as you want by toggling your OCO function on and off. So you can have OCO2, OCO3, as many, you can bracket as many times here as you would like. The important thing to remember is that the order is live, unlike when you're using the trade manager down here to set your trade. Oh, come on. If we see the E-mini trade here below the 2131 area, we could see a fairly decent move to the downside. This current bar rather conflicted. It's trying to move higher and lower. Let's throw another tool on here. I forgot to show you guys the Geiger counter. So this tool is the Geiger counter. It's essentially a tape reader. So you're going to see the tape build here. So you can get a visual of the buying and selling, really is what it is. Sometimes that's a little bit easier to interpret. The Geiger counter also has this needle, which tells you the short-term bias. Currently it's reading fairly neutral, although it is starting to dip down here. There we go. Now it's getting a little bit more bearish. You get the current bid and ask, but what I like about the Geiger counter is this dial. It keeps bouncing back and forth, and it doesn't seem to make much sense until it pulls to one side and sticks. See how it's sticking and holding? And that must have been a good 4 or 5 seconds. That's substantial. If it doesn't pull back and stick to the other side, we should see a short-term move lower. Because what it's showing you is a very aggressive selling. The buyers can't counter them, so there's a lot of aggressive selling. If we don't get the move lower shortly, then we can expect a move higher, because what that tells us is that all that selling pressure was absorbed. See here, we got a spike of selling going through the market. So this is actually not that bad of a bracket trade. The longer it stays here, we could see a decent move higher or lower as it breaks out from here. The Geiger counter, by the way, is an add-on as well. I'm sure you figured that out already. It's a system add-on. It will work on any chart. It doesn't need to be a DTS chart. It will work on a 15-minute chart or a 233 tick chart or whatever it is you're using. They're fairly balanced at this point. I wonder if they're going to stay this non-committal until the FOMC. They very well might. Yeah, in which case we've got a little bit of a wait ahead of us. Because those minutes aren't due out until this afternoon. Russell is asking, what about the rule of 3 on the NASDAQ Eagle? Let's take a look at that. Well, we do have the 3 counter trend signals. I haven't seen a decent retest though. Right? You need the 2 components for a rule of 3. Trend and a test to the extreme. You've got the 3 counter trend signals, but I don't know, the way I see this, I don't really see a decent retest of the low. Now, in hindsight, it may turn out that this little shot down here was the best that the sellers could muster. But right now, technically, we've got the 3 counter trend signals, but we're missing one of the criteria for our rule of 3. The thing with the rule of 3 as well is if it's unfolding like this and you're not really sure about it, you could always just use it as an early warning. If the market breaks higher, we should get a trend change signal. And if we don't get the trend change signal on the Eagle, we'll certainly get it on the Falcon or the Hawk. Speaking of the Hawk, see all the yellow bars clustering again, all more or less the same level. Yeah, we're in a sideways kind of market. The other thing you could do, Russell, because the market is so sideways, is you could consider a trade. The market has a fair amount of room to move, both higher and lower. This is true on the NQ as well as what we're watching here on the Eagle. So you could bracket to buy above the high, you could bracket to sell below the low. If it breaks the low here, we're anticipating a retest, right? So there's still opportunity to get to your profit objective before we get to the lows, or at the very least adjust your stops. Oh darn, I think, oh yeah, I wanted to show you how this worked. All right, well, we filled the OCO to the upside, and you can see we automatically got the stops in. We've got our auto break-even trigger working. But what I was going to say as well is there's lots of room to move to the upside as well. Look at yesterday's where the market topped out in the overnight, 48.42. So there's lots of room here to play. All right, so let's go back here now to our Eagle trade. Saw a spike of buying go through. Remember what I said when the Geiger counter was looking very bearish here? I said if it doesn't move lower, that tells us that all that buying pressure was absorbed and that the market may well move higher from there. All right, so as these bars continue higher, we're going to see the trade manager automatically pick up our stops and start to roll them. Wow, we're seeing a lot of selling pressure there. My goodness, they're trying to knock these guys back down. Just when you think they're about to emerge out of the trading range. What I'll do is I'll bring in my break-even trigger. So here now is the E-mini on the Falcon, and you can see we're up against the median line. If we break through there, primary resistance is 21.43. That would be a good profit target. So we'll go 21.43. I'll set my profit target up there. we're starting to see some rejection again as we get a little bit closer to the overnight highs. Come on, here we'll give it a little push with the mouse. Come on, get up there. This is a fairly tight trade for the E-mini. It's too bad because usually Wednesdays are a little bit more active than this. But I guess not on an FOMC day. All right, well, I don't think we're missing a whole lot of other stuff. Oh, maybe here on the crude oil market. Working a possible trend change signal. We're just getting the warning dots at the moment. Problem is we've got a very pronounced downtrend. Crude oil trying to recover. So we've got the warning dots. We haven't printed the signal just yet. Ideally, what I want to do is I want to buy on the signal and cover the trade below the low, but I know given crude oil, it's not going to let me do that. Not for 2% of my capital. So I may have to look at doing something like that, maybe trading to the crest in the trend line. Once the signal actually prints, however, like I said, at the moment, we only have the warning dot. I know it's kind of boring, folks. If anybody has any questions or any market you'd like me to try to pull up, please don't be shy about asking. All right. Well, we at least saw the trade manager roll the stop a little bit. Did you notice that? As this bar completed, the trade manager actually rolled the stop up. Now what I'm going to do is I'm going to get ready to hold my stop. There we go. So you see I can preview different stop strategies. This is the swing strategy. Maybe a chandelier. No, chandelier is going to be too far away. Because the parabolic might be a little bit too aggressive to start. So what I'm going to do is I'm going to switch to the swing strategy. And we'll allow that to hold our stops for the moment. As they continue to try to sort things out. Hmm. Yeah, it sure has. Steven says October sure started out to be a boring month. Yep. I think a lot of traders are waiting for the shoe to drop because October is traditionally the month where we see the stock market make a rather dramatic decline. Black October and all. You've probably heard of that. Well, ever since Black October, it seems like every fall, traders are leery and they expect the bottom to fall out of the stock market. All right, well, Geiger counter trying to look a little bit more bullish, getting a little bit of buying pressure through there. I'm going to put this on the shelf for now. But that's how the OCO function works anyhow. Still nursing our Falcon trade. Still trying to get out of this short-term little sideways trading range that we have going on. You see, sometimes as I mentioned, the biggest challenge in trading is not always picking the direction, but rather keeping out of the way until you can realize a profit. Now, we've got a long ways to go, admittedly, before we get to our profit target, and this market is decidedly in a sideways trading range. But it ain't a loss until you get stopped out. And by capping my risk, I'll never lose more than I can afford. I know I sound like a broken record, but like I said, I see traders doing this all the time. Uh, Good question here from Rod. Rod asked, do you ever trade the pre-market, and why do you call it a different animal? Um, I don't usually trade the pre-market. That's because I live on the West Coast. So the markets open at 6:30 my time, pre-market, 5:30 in the morning my time. I'm not a very good morning person, Rod. So no, I tend not to trade the pre-market. But about an hour before the market opens, there does tend to be a fair amount of trading activity as traders jostle for position prior to the market opening up. That can lead to some kind of choppy trading sometimes because the volume is much lighter. You look at the volume here on the low, we got 772, and then we look at that same price level after the market open, and we've got over 1,000 orders just on that one bar. Um, you can get some decent moves though. Not this morning. Let's go back another day. Sorry if I'm making you dizzy. But yeah, if you live on the East Coast and you've got places to be, at 9 o'clock, then the pre-market's a great opportunity for you because you're probably up anyhow, getting ready to head out. And you may be able to catch nothing going on the day before either, but very often there'll be a quick little move. As I said, as traders try to position themselves for the open. Sometimes you can trade the European markets as well because it's getting toward their market close. Well, not quite the market close, but certainly their afternoon session. So you can look at things like the euro and the British pound, the DAX, the Stocks 50, the CAC 40, stuff like that. Yeah, Rod asked, do the signals have the same probability? Yes, they do. We always focus on the high probability signal. So regardless of the market, regardless of the time frame. So just as a for instance, here are the hawk signals. These are the high probability signals that we tend to focus on. So we've got the first micro-macro cross, which is a very high probability signal. No word of a lie, you can make a living trading that signal right there. You can ignore everything else and trade this signal, and you can make a living on the first micro-macro cross. It is insanely accurate. It's a signal that people in the trading room hear me say all the time, I'll take almost without exception. The macro pullback signal, also a very high probability signal. Unless it's the second not the second, unless it's the third or fourth instance within a trend, then it starts to become a little bit more questionable. 4-arrow consolidation pattern, also very high probability signal. Some markets, however, like crude oil, gold, even the Russell, some markets tend to move a little bit faster, so we'll look at taking a signal on the 3rd arrow. The post-consolidation pattern, in this case, also happened to be a macro pullback. The macro pullback is easy to identify because everything stays in sync except the micro line. That thin line goes out of sync. But the bar colors, the macro line, and the filter all stay in sync, and the signal, of course. And then your last signal is the red bar buy or the green bar sell in a downtrend. But this is one that you can trade counter trend as well, and you can look at shorting below the low. And sometimes you get some pretty dramatic moves as that unfolds. So there's the high probability signals for the hawk. And then we also have high probability signals for the falcon and the eagle. So with the falcon, we have the trend change signal, the late filter entry signal the filter goes out of sync, comes back into sync. And then we have our basic trend line touch signal, which is essentially like a bull flag or a bear flag, where the market retreats into the trend line. Trend line does not change color. The falcon bounces the market lower, produces a signal, but everything is in sync. All right, so we have like I said, our high probability signals that we tend to focus on. And they work after hours. They work, whenever. So here, let's go into the overnight. So here we are yesterday in the overnight session. We got a first micro-macro cross signal right here. So let's pretend we're trading that one. Now, because it seems to be counter trend, I would probably risk my stop a little bit deeper, give myself a better chance of hitting my profit objective. So the market brings me in, moves against me a little bit. Here's that red bar buy signal. Gave you another chance to get in if you wanted. And, oh, they just came up short. They should have hit your break-even trigger. If you're not running a break-even trigger, you would have had an opportunity to start adjusting your stops off this red bar buy. So let's say you got stopped out around here somewhere. If you have something like a first micro macro cross signal fail, there it is right there. You might be wondering why I didn't choose this one. The macro line is not in sync yet. The macro line, bar colors, filter, everything is in sync on this one. So this is technically the first micro macro cross. If you have something like a first micro macro cross signal, a high probability signal, not reach its profit objective, that's also a clue that maybe the market is going to be range bound. Because, hey, we're just looking for a short-term scalp here, right? That's not a huge target. And the market, even on the second attempt, comes up a tick short. And that kind of starts raising red flags and saying, oh, maybe we're going to be in a little bit of a sideways kind of day today. And you can see that's exactly what we got going on. If you ever have two high probability signals fail, so for instance, let's say you took a first micro macro cross signal to buy, so this guy up here, and you're going to give it a reasonable amount of room. You're going to cover it down here, and let's say the market retreats and stops you out down here, and then you get a first micro macro cross signal to sell, and you do the same thing. You know, you give yourself a reasonable stop and you put it up here, and the market fails on the second signal as well, then that tells you that something is seriously wrong with the market. You should never see two signals fail like that back to back. If it does, pack up your toys and go do something else, because the market is just being totally uncooperative. All it's looking to do is churn buyers out of their trades, and you should probably go do something else. Now, days like that are fairly rare, thank goodness. Sita is asking about a Falcon signal. Let's take a look here. Yes, we did. We got our trend change signal. Hooray! Like I said, it's a little unfortunate we got into the signal early down here because we've kind of been nursing this trade the whole way. You could start to roll your stops in a little bit, or perhaps go with an ATR stop. Now watch what's going to happen. The trade manager is going to grab my stop, and it's going to start rolling it here according to this stop strategy. So as soon as I enable this and accept, there. So now my trade is on autopilot, and the trade manager is going to just continue to roll my stops for me automatically. I guess they didn't hear me. Okay, the trade manager is going to roll my stops for me automatically as the market goes lower. Well, FOMC days, what are you going to do? But like I said, it all boils down to this here. And I know I get up on my soapbox, but I see so many traders doing it wrong. I see so many traders focusing on, oh, if I just get the right settings for my Bollinger Bands, or what are the best settings for stochastics, for day trading the E-mini and stuff like that. It's like, no, that's not where the answer is. You need three things, I think, to be a successful trader. You need an accurate signal, so a signal is important. You need a way to manage your trade, and you need money management. It's kind of like a three-legged stool. Without all three legs, it's a little bit of a gamble. Yeah, and Andrew says, and Eric in your toolkit. Well, I help out where I can. This market's really conflicted. 4,800 is my target. If we breach 4,800, then we should get some follow through. Andrew says, "You're the voice in my head that makes sense of all this." Oh, okay. I'll make a little subliminal recording for you, Andrew. You can listen to it at night when you go to bed. Don't risk more than you can afford. Oh, I know. Moses is asking, where was your entry? Oh, way back here. Shortly out of the open, we had decent signals on the Hawk and the Eagle, so the scalper and the trend trader. And then we got this Falcon signal. Now this is what we call a late filter entry signal. Normally this is a very high probability signal with decent follow through. The problem is 4,800, this level right here. That was yesterday's low. And if I take a moment here and build you a chart really quick, you're going to see why that's so important. It's not important because it's yesterday's low. It's important because a lot of traders are looking at that level as a keen level of support. So here's the NASDAQ now on a daily chart. Watch this. The trend line's actually a little sloppy. On a continuous data chart, this trend line is actually a little bit better, and it falls just like that. The overnight on back here dipped a little lower. So there's a lot of support around 4,800, a lot of buying. So 4,800, not only yesterday's low, but also a bit of a sticking point because of that trend line. Now, if it wasn't in the demo room, I probably, well, you know what, it is, I keep telling you, it's a high probability signal. Take it, manage your risk. So that's what we did. We took the signal here, the late filter entry signal. It is a high probability signal. Unfortunately, shortly after taking it, the market decided to run against us for a ways. And we ran a rather deep stop because, hey, trading is all about probabilities, right? We don't want to get stopped out prematurely. In fact, I may choose to run this stop a little deeper still. If they're going in my direction, it's not going to be a big deal to hold my stop back. And they finally started to trickle lower. So yeah, we've been nursing this trade for almost an hour and a half, and it's probably going to take me another hour and a half to get it to where I can possibly get it to break even, maybe even into a profit scenario. They're totally uncommitted this morning, and that's probably because there's an FOMC meeting this afternoon. No, Moses asked, did it stop you out first? No, it did not. We've been managing that same trade. My initial stop was up here. Oop. Got to freeze the chart there. My initial stop was up here. So they made a good run at it. They didn't find me, thank goodness. But, you know, Moses, even if they did stop me out, my risk was still contained to an amount I can afford. I only had 2% of my capital at risk. So that, to me, that takes a lot of pressure off of trading, knowing that your risk is contained. Yeah, you may make a bad decision. That's trading, right? We're not going to be right all the time. But when we're wrong, let's not lose more than we can afford. That's where traders go astray. They lose more than they can afford. I'm risking 2%. So on a $20,000 account, that's maxed out at $400. Here, I did a presentation with Adam just a little while ago, and let me see if I can find the slides for this. This might help illustrate the point, and it'll be a good note to finish the session on as well. Where did I put it? Hold on, I'll find it. Doggone it. You think I could remember where I put it? Hold on. One more place to look. I really should keep all these things together. There we go. Found it. All right. So let's go down here to this little example. Okay, and oh, I got to change the screen sharing here. 1 second. There. Okay, so this is, like I said, a presentation that Adam and I did a little while ago, but it's a very important point. Most traders lose big and win small. Right? They say something like, "Oh, I'm going to be a careful trader. I've got a small account. I'm only going to trade 3 contracts. I'm going to be very careful." So what's the problem with that? Well, you're not keeping your risk constant. And as a result, you may end up risking more than you can afford to lose. You're not maximizing your winners as well. So how do we fix that? So this is going to be a typical trading day for a lot of people. So you're trading 3 contracts. Trade number 1, market throws you a curveball, and you end up with a $150 loss. On 3 contracts, that's $450. The next trade, okay, let's say the market suckers you again. This time you take a $200 loss. On 3 contracts, that's $600 loss. You're 2 trades in and you're down $1,050. So now what happens is, you say, oh, the market's got my number today. I'd better be careful. So you reduce your position size from 3 contracts to a single contract. Trade number 3 turns out to be a winner, a $200 winner, but you've only got 1 contract, so you made a $200 profit. You still have an $850 loss. So what should you do? Well, let's say you're running a $20,000 account, and this is true regardless of the account size, 10,000, 200,000. You want to cap your risk. So let's say you limit your risk to 2% of your trading capital per trade. So in the same scenario, trade number 1 is a loser. We have lost $400. That's 2% of $20,000. Trade number 2 is a $390 loss. You can even say it was a $400 loss. It's for $10, it's not going to matter. But notice it's capped at $390 because we've limited our risk. We have $19,600 left after our $400 loss. 2% of that is $390. Trade number 3 is our $200 winner, but we're trading size, right? We're trading the same size across the board. So we've got 4 contracts in play. We've got an $800 profit. So after 3 trades, rather than being $850 in the hole, we're essentially at break even. And if we traded 5 contracts or 6 or more, we would actually be in a profitable position. Did the light just come on? It's a very, very important concept. One that most traders never get their heads wrapped around. If you keep your risk constant as a percentage of your capital, you will never lose more than you can afford, and you will also maximize your earnings. So you adjust your position size to reflect your risk amount, but your risk is always the same. Don't strangle your trades. In other words, don't keep your stops ultra tight, and don't overtrade, and you have yourself a very profitable trading combination. And that's the whole thing behind the trade manager here, is that the trade manager, and let's go back now to the other chart, the trade manager enables you to maximize your position without risking more than you can afford to lose. So here's that first micro-macro cross signal again, right? Micro line crosses macro line, first signal where everything is in sync, high probability signal. So let's say we're going to short on the hash mark at 1409. Now watch, if I place my stop just above the high, I've got $400 at risk, but I'm trading 8 contracts. If I place my stop I look at that and reasonably I should probably place my stop up here. I still have about $400 at risk, but look at what Trade Manager has done. It's adjusted my profit or my size. If you were a onesie trader, however, we would both have a winning trade, but I've earned twice as much money as you have. Or if I were ultra aggressive, let's go with this scenario here that I know so many of you love to do. You place your stop here, you put your profit, or pardon me, you place your stop there. Okay, you have $50 at risk and you're looking to make 50. Okay, great. I'm going to risk 2% of my capital. So yes, I have $400 at risk, but when this trade works out, well, all right, well, this is why we don't place our stops so close. Oops, sorry, wrong signal. This one. There's the first micro-macro cross. So you have $50 at risk, you make $50, but when this trade works out, I've made 8 times as much money as you have, while never risking more than I can afford. Yeah, this trade could back up. I could be out $400, you could be out $50. You say, nah. You lost more money than I did. But at the end of the day, it's not just about limiting your losses, right? What's the other half of that equation? Let your profits run. Well, what's one way to let your profits run? And that's to maximize your earning potential. Most people think let your profit run means, hang on and hope you hit a day where the market, I'm getting there, where the market does one of these, right? Let your profits run. Yeah, okay, great. Fantastic. How often does this happen? Hasn't happened today, right? It'll happen once every couple of weeks. If you're okay trading once every couple of weeks, then that's fine. Nothing wrong with that scenario. But if you're going to be day trading, if you're going to be doing this daily, then maybe you need to look at it from a slightly different perspective. And that's why this Trade Manager is such a valuable tool, why the whole DTS system addresses every aspect of your trading. It's not just giving you a signal generator. Shoot, you can get a signal generator anywhere, but you need a high probability signal, you need a way to manage your trade once you're in it, and you need to manage your risk. If you can do those 3 things, you will make money trading. I guarantee it. Okay, I'll put the soapbox away now. I think that's probably a good place to close up the room today. Folks, the markets are just going to go sideways until the FOMC minutes are released this afternoon, so it's going to be tough slogging. If you are going to hang out and try to trade some more, well, I would think a run back to 4,800 would be rather ambitious. If the market, of course, pivots again and gets out past some of these highs, it's very likely to try to rally a little bit higher, but currently we're capped around this 48, 22, 23 area. So if anybody has any more questions, please type away. Otherwise, like I said, we're going to close things up. DTS owners, I will be in the trading room again tomorrow morning, so we'll see you then. We're going to have another open house next Wednesday. I hope you'll be able to join us. And I hope it was at least a little bit educational. I know the markets didn't give us very many signals today, which is unfortunate, but it happens. Your job as a trader is only to take what the market is giving you, no more, no less. All right, no questions? All right, well, thanks again for your attendance, and if you have any questions, feel free to email me or Adam, and we'd be happy to answer your questions for you. Talk to you soon. Bye for now.